Good morning, everyone. How's it going? It's great to see you. We're taking a look at the markets and the things that are affecting it overnight. There wasn't a lot. So it really feels like that we're returning back to more of a technical analysis rather than a volatility analysis. So let's go ahead and take a look at our futures and see what happened and see what's really driving the markets. And we'll take a focus on day trades and then maybe start planning for a little bit more longer term swing trades. So instead of overnight swing trades, 2 or 3 day swing trades, we'll take a look at our normal time frame, which might be anywhere from 1 week to 3 weeks, maybe 4 weeks when it comes to swing trades. Let's go over here and take a look at our futures. And futures, you can see that we're up, but not a huge amount. So this is slightly random, actually more in the random territory. Our 10-year note, I'd rather look at the 30-year note. The energies, oils down a tiny, tiny bit. That's just definitely random. Let's take a look at our financials and take a look at that 30-year. Actually, let's look at it over here. So that is our bonds. ZSB. I'm blanking on the symbol. ZS. Let's take a look real far. ZBZ. ZBZ. Okay. All right, so we can see that bonds are up. They're up quite a bit, actually. And we took a dip right here. We started trending down and we dipped at 530 and then made a sharp recovery. That's interesting. So there was economic news. That was the PPI, right? If I remember correctly. Yeah, we had the PPI at 5:30 or 8:30 Eastern, 5:30 my time. It looks like, at least in the treasuries, we started to go down into the report, but that is a very sharp V-shaped recovery. So it's interesting. We got some bad news in the PPI, but we shrugged it right off. So let's see what that bad news was. Obviously, it would mean that higher inflation, right? So yeah, 0.3 consensus month on month. We got half a basis point or half a percent. 1.7 a year on year, we got 2.2, and it looks like really right here is where most of the ex-food and energy year on year, 2.1 was expected. We got 2.7%. So basically, what we're seeing here is that inflation is sticky. It's not. There's no quick solution to it, and that made initial fears. It looks like that rates might continue to go up, but that got brushed off very, very quickly. Let's see if the same thing happened in S&P. Oh yeah, so in the S&P, oh, this is the wrong one. Never mind. Here we go. Yeah, same thing happened in the S&P. You have this huge sharp bar on large volume after that report came out, and then the market decided, you know what, that's not such a big deal, gyrated back and forth, and now we are right back up to the pre-report levels. So market really isn't caring too much about the PPI. So the next thing that we're going to be focused on is the FOMC minutes. Now remember, FOMC minutes is from the previous meeting, which was several weeks ago. So anything that we have in here is not going to be reflective of current data and current information. What it is going to tell us is the leanings of various members within the FOMC and how they might be pushing policy going forward. So there will be volatility when that news comes out, but given that the market completely brushed off the PPI data, I don't know that the FOMC minutes are going to make a major impact. So it looks like this market is going to go wherever it wants to go. So that's even more of an indicator that the volatility analysis is not going to be too helpful to us right now. So we are really going back to technicals. Normally, when technicals are ruling the market, then a news item will affect the markets very little. At most, it'll impact it for a day. So overall, a trend will stay intact and just overpower whatever that news is. And it's definitely looking like that's what's happening right now with this PPI report. So I'm not expecting major changes in directions or in technicals of the markets in the FOMC minutes, because that's old news. It's new news in the sense that we're only finding out about it, but it is several weeks old in terms of when the decisions and when the discussion was made. So we're definitely going to start focusing back on technicals and what we can see in the markets and where to kind of help guide us where money managers are placing their money and where good opportunities might be. And let's just finish up with, is there anything else that we want to see in the futures? Not really. Okay, so given that we're looking at technicals again, I want to look at all the indices. S&P 500 broke above the EMA 20 yesterday. We talked about that in the recording for yesterday's afternoon market session. What we really want to see is it to go up to the MA 50 and then beyond. The QQQ, we're already there. So that's very positive. Let's see if we get the low completely above the MA 50 today as well. And then the Dow Jones is not doing quite as well, but we are approaching that MA 200. It's going to be a very important psychological point for institutional investors and money managers for that to get above the MA 200. And then our small cap stocks, well below our MA 200, but approaching the EMA 20. We need to get above that and above the MA 200 and MA 50 before we start getting really bullish on small cap stocks. And until we get really bullish on small cap stocks, we can't really be super bullish about the market overall. So what that means is we want to see in our sectors which ones are oversold, which ones are just being completely ignored that may come back into play, and which ones are super strong, which will continue to be in play. And part of that will be taking a look at where earlier this year, since we had a very bullish years until about a month ago, but still overall still very bullish, looking at the wrong index, still overall very bullish. So what we want to see is where were institutional investors putting their money earlier this year on this rise up, and then we kind of took risk off. But the things that I was interested in leading up to here, to this, what was that, 20% about? This 20% growth earlier in the year, before we backed down, what were institutional money managers interested in? Because once we start bouncing back up, which we've started to the last few days, those are the things that we're going to be interested in going back into when we really believe that we might be going back up. So that's going to be interesting to take a look at. We'll do that this afternoon. This morning, we want to stay focused on potential day trading opportunities. So I'll save that for later. Let's take a look at the VIX real fast. VIX came down and continuing to come down. Remember, VIX we get a little bit early. So this is already starting to reflect. This is still Wednesday. Yeah, so it's this latest bar is already reflecting today. And we are continuing to come down. That is good news for the markets. So we can expect that at the very least at the open that we're going to see an upward motion. Let's see that where we closed yesterday. So yesterday we closed around here, and then we will see that we are about that same level, not significantly higher. We already saw that when we looked at the futures over here, that we weren't hugely higher, but we are approaching a little bit beyond random right here. So we'll expect it to move higher. Volatility is telling us that we're probably going to expect to continue that trend unless something weird happens, which I don't really expect because we already have a huge major economic report behind us. FOMC minutes will definitely cause volatility, but based on everything I already said, I don't want to repeat myself, I don't really expect it to change directionality. And you can see that we're getting a pretty strong bar upwards here in the futures market right now. So let's take a look at potential opportunities. So over here, yeah, I'm on the right screen. Okay, so Tesla is almost always in play. So let's take a look at Tesla. Let me refresh this. Okay, yeah, so a lot of action post and pre-market. Looks like we're moving higher today. This is definitely something that I will be taking a look at during the day, and actually I might be looking at it a little bit longer term as well. So I might actually look at a swing trade today in the aftermarket. Another one is energies. Energy is still a hot sector as long as there's uncertainty about what might happen in the Middle East or in Ukraine. Energies will stay elevated. If we believe that the economy is strong, it's going to stay elevated. The only thing that would derail this is if there's a huge supply that suddenly comes in, which is unlikely because that's largely controlled by OPEC. Or if we get a really terrible economic news, it looks like that we're going to slow down an economy, and it doesn't look like we're getting that. So let's choose a symbol that has been active quite a bit, and that is ExxonMobil. You can see that in the aftermarkets and pre-markets, it's just been trending straight down. Lately, we've seen a lot of surges, directional movements, breakouts in our day trading, so not a lot of pullbacks. So what we want to see is if we break through this level right here, especially we're at the lows, is that if it just keeps moving, then especially if we get a strong downward bar with large volume, we would just go in. We wouldn't necessarily wait for that pullback. If you go in and it pulls back, don't freak out. Just hold on to your position and see if it bounces back down in your direction, right? So that's how we would play these breakouts. So the same thing would happen with Tesla. If we get a strong surge up through this upper line right here, then you would just go in right away, not necessarily wait for that pullback. And even from here, if you really want to play off the morning volatility, you can see does Tesla break downwards or upwards, and then you have these other lines as guide rails saying, okay, well, we might bounce off of these levels. So even if I don't go, or even if I don't get the 5 Heikin Ashi bars in a row, I may just want to close out my position if we get near one of these purple lines right here. Okay. Other one that we want to look at is Plug. Plug is up huge in the pre-market. So I probably want to start paying attention to solar energy. So we'll take a look at that in a little bit. It's probably more appropriate in the after session, but if we have a couple minutes, I'll take a look at that right now, or in the pre-market. And then other one I want to look at is Palantir has been really hot this past week. But the other one that had news was HPQ. HPQ really spotty in the pre-market. So I would probably go with Palantir. Okay. So those are levels that we'll look at for our day trades today. Let's take a look at solar, because solar is becoming really interesting with the focus on the energy sector. We've been looking mostly at the oil, the traditional energy sector, but let's take a look at solar. Plug is just an energy stock. Let's take a look at, I'm blinking on the major solar ETFs. So anytime that happens, I can just Google solar ETF. No, top solar ETF. TAN. Yeah, TAN. Okay, so you can see that solar has been really beat up lately, but we've hit a new low. It's bounced back yesterday. This is looking a lot like, for example, consumer staples. All right, so we bounced back a little bit above that EMA 8. So we should be heading at the very least towards that EMA 20. If I look at something like XLP, consumer staples, you see how that's very similar, right? We bottomed out the last couple of days, we bounced into our EMA 8. So I think that this is a real, if I was managing institutional money, I would be looking at this very carefully. Right, so this is going to be very attractive to institutional money managers. So this is, oh, well, that's plug. Let's look at TAN. Right, so plug and TAN, very similar, right? And this is going to be really interesting to institutional money managers, since we are still focused on the energy sector, and this is a really beaten down area of energy, and so there could be a lot of value inside of these stocks. And even if traditional energy starts to back off, with solar energy so beaten down, there tends to be a rotation between them. They are not a one-to-one correlation, right? They are actually somewhat inversely correlated. If I'm going to go into energy versus I go into TAN, let's just show you that. You don't have to take my word for it. So we are inversely correlated. We go down, this one's going up. Okay, so this one we're going up, this one's coming down, and then we become correlated, then we consolidate, then the pattern repeats itself. During consolidations, they come together and move together, but then when they move after the consolidation, they start moving apart. So they need to come together in order to consolidate, right? Or right now we can say that energy has been consolidating for a little bit, and so we expect this to come together before they consolidate at a new level and then move apart again. So I'd be interested in looking at TAN longer term, and not necessarily maybe as the sector as a whole, or even individuals within TAN. But today we've got plug in focus, so that tells me that at least one major solar energy stock is in play, and so institutional investors are going to start looking at plug, and if they look at plug, they're going to look at other ones, and so it'll be interesting to see if other solar energy. So let's take a look at TAN. In the aftermarket session, we're going to see, does TAN move up in a significant way, and if so, then we know that they're starting to go into play, and we'll pay attention to it for swing trades as well. Okay, but for today, for this session, we're going to just stick with Palantir, Plug, Exxon, and Tesla. All right, So if you have any questions, send them my way. I will answer them in the aftermarket. Otherwise, have a great day, and I look forward to seeing you in the afternoon.